It's Quant Trade Edge, and today I wanted to look at gold and give you a couple of different perspectives on how to have played the breakdown today. So, after this major reversal on Sunday night and Monday, we had 3 days of consolidation, and this right here is a hoagie with 2 days activity completely inside of the mother bar there. And one way to do it is obviously to wait for this break. But with the hours that gold has, something that sometimes clears it up is limiting your hours. And one way you could do that is looking at this ETF GLD, which is the ETF for gold. It should track the gold price, very closely. So borrowing on the concept we had yesterday, where we looked at AMD, and there was a gap up in the stock that went beyond that which the options market had predicted, and that led to a positive feedback loop where the market trended higher. Well, here the same thing happened. Yesterday at the close on GLD, based on the straddle, the lower boundary would have been 186.63. And there wasn't earnings or anything, but there was the non-farm payrolls release, which caused this gap. So we gapped below that lower boundary, which is our sign that this wants to trend lower. And it had a very clean ABC back into the boundary. I'll blow it up here so you can see it. And then we could even put the GAN indicators on. And you'll see that upswing, downswing, upswing. And then this would have been your risk bar right here. It's also the only close, well, I guess it's not the only close. You had another one here, an inside bar. But then that was followed by a good size sell-off. And this was overall a fairly sizable move in gold, but it was coming out of a 3-day balance, so it had room to go down. So that's just a way to kind of mix metaphors, if you will, looking at the futures, but also using GLD just because it's a lot simpler to get your straddles on SPY, GLD, SLV, things like that, than it is on the actual futures because they're constantly moving. Some of them are less liquid than others. The S&P futures themselves, this morning on the jobs number release, the straddle was 30 points wide. So that 30 points wide from this close here, 80, would have been 50.25. And 30 points above would have been 10.25, 46.10.25. Close enough. There you go, 25. So on that initial reaction we had down, we knew that it did not go far enough to create a feedback loop to the downside. And then it slowly went up and found resistance at upper boundary. And then it sold off from there and then continued to drift higher. And it's just sort of playing around, getting a little bit of acceptance at this upper boundary level. So, even on days when you don't have a positive feedback loop, this is very useful to know where those levels are because they're kind of like invisible support and resistance. Now, if we had thrusted through there with some force, then I would say you have a shot at a positive feedback loop. But you typically need a gap or a major thrust through it to start the feedback loop. Otherwise, they're just magnets and they are support down here and these act as resistance up here. There was another example yesterday. It was a stock called CHWY, and it gapped all the way down here on some horrible earnings news, but let me see, I can look at my notebook and see if I have the number written down from yesterday. 1643. So the lower boundary was 1643. So as much as this gapped down, it was not enough to start a feedback loop. So when that happens, you typically go back to gap fill. And that's what we got here. This gap would be 1935, 1937. It was kind of a fairly straight shot, and this is significant. We opened at 1702, so to get to 1935 is, gosh, 15%. 15% in an hour and a half, an hour 40. So just a few more examples here of positive feedback loops, and this particular pattern, and what we also saw in the S&P today, I called failure to PFL, because it didn't thrust through or gap through one of these boundaries. So in that case, it just bounces between boundaries typically. So that's a failure to PFL, and GLD, as we saw today, was a good positive feedback loop. And note that the word positive feedback loop just means that selling begets selling, and you have a trend, or buying begets buying, and you have a trend. It's not about which direction it's going. The act of trending makes it a positive feedback loop. But anyway, ask me questions. Hope this is starting to make sense. Have a good weekend.